Joining me now is Potomac Wealth Advisors President and founder Mark Avallone, and joining the conversation all morning long, Wall Street Journal Assistant Editorial Page Editor James Freeman, and the King's College in Manhattan Professor of Business and Economics, Fox News contributor Brian Brenberg. I'm really excited for you gentlemen to be here all morning, and I said that to one of our producers before the show because I value the way that you think and the way that you express yourself. So nice to see you, Brian. And James Freeman. Mark, in your outlook, you say business efficiency will rise post-pandemic. What does that mean for jobs and the way that you're betting on companies here?
Well, a lot of the focus on stocks rising is the Federal Reserve and easy money and trillions on the sideline, and that's true. But if we look beyond that and we look at the way corporations are structured now, we have low energy costs, low interest rates. The low unemployment creates low wage pressure. The increased use of technology is also making businesses more efficient, and it makes less pressure for wages because the technology is replacing people. So on the one hand, all of these phenomenons are good for companies, good for corporate earnings. Earnings drive stock prices. The unfortunate part is the lack of labor demand lowers the demand for wages. And the last 4 years, we saw wages finally rise to about 3% annually. We don't expect that to happen. So it's not going to be a good environment for workers. When you add on to that the impacts of globalism, the return of globalism from the Biden administration, we're going to see lower cost jobs again move overseas, and it will impact the labor market. So that could be the downside to what's actually helping some corporate profits now.
James Freeman?
Oh, thanks, Mark. I think a lot of people have been wondering this week why stocks keep rising, even as we see these disturbing events in Washington, even during the protests that ended up overrunning the Capitol. The markets were up for the day. What's going on here?
Well, there's always a disconnect between what's happening in the political arena and Wall Street. The market is driven by the prospects for future earnings, low interest rates, outlooks on inflation, and factors like that. It's not who's in the White House. It's only when there would be an extreme policy shift or a dramatic change. Now, we saw some favorable response in the last administration to the tax cut because it was a monumental tax bill. We'll see what the Biden administration rolls out. Right now, there's optimism because what's going to come out of Washington is spending, a huge stimulus bill. Money drives prices. So that's where the top line disconnect of, oh, there's chaos in Washington. Yeah, perhaps for a few days. But what's really coming out of Washington is candy for the stock market. And that's what's driving stock prices higher.
Should we take away that investors think that massive government spending is the long-term way to grow the economy, or are they just thinking 2021 is going to be a big year given all the money in the system?
Well, Brian mentioned the word short-term thinking right now, and short-term thinking is carrying the day. And when Dagen asks about the disconnect on Main Street from Wall Street, look, Main Street got crushed by the government shutdowns. You know, you couldn't go to a florist, but you could get your flowers at a Target or a grocery store. The big chains won out. The tech companies won out. The work from home, using new infrastructure and ordering computers and increasing Apple sales, that's what won out. That's the disconnect. Main Street, where people live, work, is feeling the brunt of this. In terms of the investing, that's where the dollars are flowing. So on the one hand, it's short-term thinking, tons of money from the Fed. But underlying all this are fundamental shifts in the economy. So I don't want to be too cynical. We started out talking about how businesses are adapting, being more efficient. They're going to find ways. The new administration may raise corporate taxes. They may not go back up to where they were pre-Trump administration, but they're going to go back up. But American corporations are resilient, and I do think there's a legitimate reason for some of the push up in stock prices. Maybe it's a little exuberant now. We might see a little volatility, but let's not think this is a 2000 style bubble, because I don't believe it is.
Mark Avallone, good to see you. Thank you so much for being here.